Okay, good morning, guys. So it's time for the YouTube video update again. Like last week, we were talking about, instead, 2 weeks ago. Okay, 2 weeks ago, we were talking about where my cursor is. Yeah, talking about the uptrend support line for the SPY, which is successfully tested, guys. The good news is it is successfully tested and it is now bouncing higher. Now, the thing here is it is climbing on a wall of worries because over the weekend, Israel and Hamas broke out into a war and we had a knee-jerk reaction. The market opened lower. In fact, for the whole day, S&P 500 futures, the E-minis are showing up to 0.8 or 0.9% pre-open. But thankfully, overnight, we managed to close higher, which is a follow-through buying from Friday's closing right here, where my cursor is, okay? This is a very significant day last Friday. It could be a KRD, key reversal day. Let's take a look at the uptrend line, which started in, where is this place? 2022, 13th of October. Oh, which is coincidentally 4 days time, guys. 4 days time, it will be 13th of October also. Okay, so this is the uptrend line, the major uptrend line that's supporting the trend over the past 1 year, and it has been tested 1 time, 2 times. Okay. In fact, I cannot say this is tested 1 time. This is rubbish. This is the connecting point. So this low connect to this low, extend upwards. You can see we have tested it for the first time. Okay. And this support, as I was showing you in the previous video, it is a very significant support because it is also the 200-day moving average where my Tiffany blue line is. Now, for those of you who are not very well versed in moving averages, 200-day moving average, right, is the difference between bull and bear market. So whenever the index trades below the 200 moving averages, it means that it is likely a bear market, okay, or under very severe selling correction. Okay, so right now, good news is we have survived and bouncing up. So towards the earnings season in October and November, this could be the reason why the market is having such optimism. Now, for this week itself, we have got Wednesday and Thursday to worry about. Okay, I shouldn't say worry. It should be to pay attention about, because Wednesday is where the PPI data will be out, and then following Thursday will be the CPI data. Now, with regards to CPI data, we may not see an uptick in the inflation data because last month's PCE was reportedly down by 0.1%. So which is quite good news. That means we may expect softer inflation numbers for the upcoming report. Now, if this Wednesday and Thursday, the numbers that is reported out and market take it very positively, then it may embark on a beautiful upward movement to at least test the immediate downtrend. Let me change this color to red so that it's easier for you to see. Okay, so this immediate downtrend, the red color line. Right now, it will not be one road all the way straight line up. Okay, there will be ups and down, up and down. That is how the market functions. Just take a look at the previous low in March. Okay, now on the way up, there are plenty of selling. Imagine you are looking at this night. Okay, you will be scared shit. You'll be like, oh shit, the market is turning down again. You have got your lower highs and so on. Okay, but know where your support is, know how to see Dow theory, higher high, higher low movement is an upward movement, then you will do fine. Okay, so our anticipation is SPY should continue to trade higher until we hit certain resistance. We see the pullback, and if the dip survive and it manage to push higher again, that is the higher high, higher low type of movement. That is telling us that it is going on an uptrend. Remember, first resistance, the red line, crack the red line, it means that it has survived. Okay, and we should be looking at higher numbers. Now, the catalyst, again, I remind you, the catalyst is the inflation data coming Wednesday, Thursday, and then you have got the FOMC somewhere in November, if my memory serves me right. November, there you go, 2nd of November. Okay, 2nd of November is the FOMC statement. Now, this could be a further catalyst for the bull to return, because if Jerome Powell do not increase the interest rate, okay, and say the rest of the year no more increase of interest rate, and they maintain their previous posture, their policy guidance, then the market can rally. Okay, the market can rally. Now, the wild card over here would be the escalation of the war. Israel has started its retaliation, aggression into Hamas. So we have to watch if more countries join in the fight. If more countries join the fights, then perhaps it will be a drag on the stock market, especially where oil price is concerned, guys. Okay, the oil price are unable to close above $88 after that knee-jerk reaction from the breakout of the war. So watch this number carefully. If it goes up above 90, 95, then we may be back to inflation worries again. Okay, so far so good, yeah. Now, the other sector that I want to highlight to you would be the okay, these are all the ETFs, which is the different industry and different industry and sector in the Wall Street. So aerospace and defense, war breakout. So this sector has a knee-jerk reaction, and you can see that last night's trading, it went up quite significantly, right? So what are the stocks in this sector that you can pay attention to? According to our trend master, TXT. Okay, TXT had a signal and it is exhibiting a bullish setup. Okay, so this is the trend master signal that is signifying that there is a bullish technical event happening, and this is the follow-through buying yesterday. So right now at $79.21, it is near the breakout level. You switch to the weekly chart. Okay, you can see that this is bullish. Okay, this pattern is bullish. So is this the all-time high? Let me just zoom out further to take a look. Is this the all-time high? If it's the all-time high, oh, guys, this is the all-time high. So if you break the all-time high, it can fly really fast, and it can fly really fast, and there will be very little selling. Line of least resistance. Okay, so therefore, watch this breakout carefully. And the other thing about the company would be the earnings. Earnings is strong. Earnings is good. You see green color. We did some color coding here, so for easy browsing of the stocks, okay, under the result list. But later we'll go through this. So once you go over to the right-hand side, you can see that, hey, actually it is earnings is growing, revenue is growing. So you can also scroll down to take a look at the developments of the earnings, balance sheet, and so on. Okay, but to keep things simple, okay, for those of you who are not well-versed in financial statements and also don't know how to read the fundamentals, green color is good. Okay, green color is good. And this industry is currently in play due to the war. Okay, as soon as the war is over, this industry may start to weaken. Now, if you want to know what other stocks are inside this aerospace and defense industry, click on the blue line over here. You will see the rest of the companies here. Okay, aerospace and defense. So this is how you can trade the war team right here. Right now, if you go and do our normal screening, okay, make sure you select the Trendmaster V3, guys, and then NYSE or NASDAQ, take your pick. So let's talk about NYSE today, because I went to see NASDAQ, there wasn't a lot of good charts around. There's only 5, okay, and I went through the charts, nothing to shout about. Or for last night's trading. This is based on last night's result. But last week, we do have some very bullish chart, good signals like MNSO. Okay, now this chart there is a signal last Friday. Okay, last Friday. So you can see there is follow through buying right here, and also it is near the resistance breakout level. Again, earnings, just take a look on the right-hand side. If it's green, then no problem. Okay, so potentially, MNSO have a potential to continue to trend higher. Okay, this could be the results of the Golden Week holiday in China. So that aside, what other stock is good will be Corisa, COUR. Okay, these are all Nasdaq stock before, sorry, this NYSE. So this one is also good because last week we have got signals coming out. Now, guys, signal arrow only tells you that it has met the technical criteria, or doesn't mean it's an immediate buy. You still have to watch out for the resistance breakout or the follow-through buying, and then to check the multi-time frame to make sure that you are buying at great levels before you proceed. Okay, so now let us go and do our screening on NYSE, which is the latest data for 9th of October. Okay, 9th of October, there you go. You have the first one, Dell. Okay, first one is Dell. So as you go down the list, when you go down the list, make sure you are looking at green color. Now for Dell, you can see that it is all red because it has been reporting lower earnings until last quarter. Last quarter, it surprised the market by, you see this big gap up over here. Let me turn off my template so that you can appreciate the gap up. Now, this gap up is due to its earnings reported in September, okay? It reported a surprise upside. That is why the stock gap up. So potentially over the next quarter, it may continue its uptrend. Okay, it may continue its uptrend. So pay attention to this stock. So the signal is already out. So probably this week, you can pay attention to Dell and the rest of the stock in this list. Now, you can also go and check out the industry. Okay, so if you want to look at industry and focus down on industry, oil and gas is because of the current war situation. Okay, we've got packaging, discount store. I think retail data will be out next week, so it could signify a turn. There you go. So those of you who are well versed in chart, you will see that it's sitting on 50-day MA, testing the Tiffany blue line, which is the 200-day moving average. If it can break out successfully, you could see a follow-through buying. Now, again, the earnings right here is not the best. Okay, but last quarter, it did report a growth. That is why it's green in color. So you can see the color code can help you to see the earnings, get a sense of how's the company doing financially at a quick glance. Okay, so you can do the same down the list, and every single day, just do the screening. You will have about 10 to 20 stocks to contend with, and look out for the industry, which I update you on the Monday night webinar already. And then on yourself, by yourself, make sure you're looking at profitable company, and it must have a catalyst to go higher. Also, if you're talking about discount store like retailers, this industry is a wild card, because we all know that they have got the higher interest rate to contend with. So it may not be best to trade the retailers for this season of earnings. Okay, for this earnings season, pardon my English. Okay, so the other thing I want to highlight to you will be, I have added more ETFs into the watchlist here. This is to, you see, every day we will have a lot of stocks, okay, from different industry. So which industry to pay attention to? Now you can use the ETFs on the left-hand side, okay, and then you can check out the different, like for example, biotech, okay. Now biotech in March, right, it made a very strong run up. Okay, a lot of biotech stock went up. So this is where, if you see the chart of the sector of the industry turning up, the particular industry should be in play. Then whenever you do the screening, you follow the industry. This is one way you can shortcut and pay attention to just the industry in play, because there are over 1,000 stocks in Wall Street. So you can't possibly study every single one of them. Okay, so this is what I have for you today. I hope it benefit you. If you like this video and find it useful, please help to like and share, and subscribe to the channel for more updates. Okay, so with that, I am signing out. See you at the next video. Bye bye.